I want to talk about what we're seeing right now, the Santa Claus rally. Josh Brown, I'm going to come over to you. Are you a believer in the Santa Claus rally? I know it's low liquidity, low trading this week. Do you believe it continues for this half a day and the last day? Does it continue into 2024?
Frankie boy, Happy New Year. Good to see you. I don't call it a Santa Claus rally. I've been around for a long time. I call it a career security rally. What you're basically seeing is people who don't want to get fired from the asset management business in January. And we see this in years where there's just enormous performance going into Q4. A lot of the things that people were worried about end up not happening. And then all of a sudden, professionals look at their asset allocation, look at the degree to which they're trailing whatever their benchmark is. For some, it's the Russell 1000. For others, it's the S&P. For some, it's the S&P, but in real life, it's actually the NASDAQ because they pitch themselves as growth managers. But this is a phenomenon that takes place across the entire spectrum of professions on Wall Street, whether you run a mutual fund, closed-end fund, separately managed account, wealth management CIO, outsourced CIO. You might be somebody that's at a family office. It doesn't matter. In the end, you cannot have a NASDAQ up 50%, cannot have an S&P 500 up 25%, and be sitting with the amount of cash that a lot of people are sitting on. And that's why last week we had the largest single-day inflow of all time to the SPY ETF. That's not delicate. That's not a sniper rifle. It's a shotgun. It's get me in. I don't care how. We'll figure out the particulars after. And it's not surprising that you'll see this carry through to the end of the year. So Santa has nothing to do with it. People want to keep their jobs. We talked about this on the show pretty much nonstop for the last 8 weeks, and that's exactly how it played out. Merry Christmas.
All right, Josh Brown says staying employed is really the gift that keeps giving. Brent, I'm going to come over to you. Josh says it's not a Santa rally, but what's your take on some of the action that we're seeing? Again, we're in record high territory pretty much across the board.
Yeah, well, I mean, I think going into 2024, as the S&P is close to its all-time high, you have two decisions to make. Are we making a double top, or is this actually we're going to push through, and next year we're going to have a softest type landing? You know, Ned Davis, who does great research, put out a piece that shows once the S&P gets through an all-time high, and it's happened 14 times, you know, looking back since the 60s, what happens 1 year later? Well, the median return for the S&P is a little over 13%. And so if you can make the S&P, which is very different than the Dow, get over that all-time high, and we still have this narrative around this soft landing that the Fed has done, I think we will continue into January. But I do have a sense that as we get later into the year, especially February, getting closer to that March meeting, I think once if the Fed does not decide to cut rates, which I don't think they will in March, I think that's where you're going to see more volatility as the market has to push out its 6 to 7 rate cuts per year, which I just think is just too bullish or too ebullient that the Fed would actually do 6 or 7 rate cuts, and we still have a really strong economy.
Yeah, Brent, by the way, we're just showing the audience right now while you're talking, less than 1% away from the record close, I believe, 0.5% away from the intraday high. Kevin Simpson, I'm going to come over to you. What do you think about some of the action we're seeing in the market? And just a complete sidebar, a lot of Philadelphia energy here on the show. Like I said, Bob Pisani's right here.
Well, you need to give some of that to the Eagles, Frank. I think it's absolutely Santa Claus, Josh. I mean, come on, don't be a cynic. The portfolio managers aren't going to try to do anything from a momentum trade or window dressing or year-end manipulation. I mean, that would be crazy. So I think the Fed gave us that Christmas present. You know, truthfully, when we saw them pivot 2 months ago, I mean, that was the game changer. If you look over the landscape for the past 2 years, Frank, it's not that much that's happened, but so much in terms of 22 being a really lousy year, 23 being mostly a consolidated AI rally, and then all of a sudden we saw breadth. And it makes sense because once you have a Fed that's backing off, no mas in terms of rate hikes, you can get back to the business of pricing companies properly. How much money do they make? What kind of multiple do you put on it? And I think the enthusiasm is certainly justified. Are we a little bit ahead of our skis? Is Josh's point somewhat valid? I mean, absolutely. But it can continue into 2024. This isn't something where I want to see the calendar year end. I wish we had another quarter in 2023.